Ladies and gentlemen, good day and welcome to AVP Infracon Ltd H2 FY26 and FY26 earnings conference call hosted by Atlas Capital. We have with us the management today represented by Mr. Prasanna D, Chairman, Managing Director, CEO, Ms. Priyanka Singh, CS and Compliance Officer, and Mr. Rutul Shah from Atlas Capital, company's Investor Relations Advisor. As a reminder, all participant lines will be in the listen-only mode. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. Since there are no opening remarks, we will begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take our first question from the line of Raghav from R21 Ventures. Please go ahead.
Hello, am I audible?
Yes, please
Yes,
go
sir.
ahead.
Okay. Good morning, and thank you for giving me the opportunity. So, my first question is regarding the PAT and EBITDA margins. So, looking at the financials, we have observed that PAT and EBITDA margins have been compressed by around 1 or 2%. So, can you brief about what were the key drivers behind this compression?
Sir, good morning, sir. Sir, actually, there are 3-4 factors this time which has affected the PAT and EBITDA. And to begin with, you all know that because of this geopolitical war and all, so vitamin prices went up. It happened only for the 1 month, but that also took a toll. So, and other than that, we were actually planning to go for QIP in the month of September, October. But because of this prices and all, share prices fell. So promoters decided not to dilute the shares. So in order to achieve this around 440 CR of turnover, we have gone to banks and other, we have taken debt of things to ensure that our turnover is there. So finance cost also went a little high compared to last financial year. Other than that, these two are the factors. But other than that, I want to just say that because in the month of March, maximum billing is done for us, Feb and March. And this time we have a high unbilled revenue of around 75-80 CR, which we couldn't bill. So the problem is that in accounts, you have to follow accrual system. So we have to book all the expenses. But since this unbilled revenue was not billed, it was not form part of sales. So for that also, for higher unbilled revenue also, our PAT margin fell down a little. So these are all the factors basically which had come into picture for this PAT and EBITDA to fall down.
Okay, got it. So following to this, so what is the realistic, sustainable PAT margin you are looking for in the future?
So we will be trying to maintain this because I think this is the worst scenario that we have faced. So we are trying that 9-10% of PAT will always be maintained. I hope MD sir also actually agrees to it. So do you have anything to add on to this?
Yeah, good morning, everyone. Thanks for attending our earnings call. I just want to add a few words in this regard. When we were maintaining a PAT of around 11.5 or around 11.7 or something like that, we were always questioned about how our PAT margins are so higher when compared to the peers. Now, actually, what happens is there are certain factors that was adding on to our margin levels. These margin levels, when we are expanding drastically, see, when our concentration is on a smaller circle and for a smaller top line, these PAT margins are always maintainable. When we are expanding, there is some dilution in the PAT level, but that is not alarming or something like that. Even then, 10% of what we have achieved is not a low PAT margin when compared to our peers. if you could compare with all the peers in the industry. And this, we are sure that this will be maintained, and we are trying our best to regain our PAT of around 11 or 11.5. We are trying our best. Since these are all the things which are, we unforeseen circumstances or unforeseen incidents, whatever had happened, which could not be predicted or which could not be, what you call anticipated. If we would have anticipated this, we would have done some homework and done something. Something like price escalation or price increase to a point of 1% or 2% or maybe even 5% is anticipated in the industry. But when a price hike of around 50% or 60% happened in the raw material, that in the bitumen, which is a major consumption of road laying, which will definitely have a hit. I don't know whether all the other people, how they are mitigating this, but this is the fact which have happened to us, and we are trying our best to get that resolved in the next half-yearly year. And also, adding to this, we are expanding brutally, and this expansion will have 1 or 2% hit in the profit, which I have already disclosed in the earlier calls also.
Sir, also, can you just throw us some light on this competitive bidding as well? Because bidding has been very competitive now, both sides.
When we come into this NHAI bidding also, the price has been, now it is getting, when we need to get some work, we have to go much competitive. Now the prices are something very competitive in the market, and people are ready to go for higher price bidding also. We are very much conservative in this. I've always been conservative, and I'll try to be conservative. And we are, in fact, if we are increasing this 1 or 2% profit margin to deduct, we will be able to get further orders also. So we are just working on that, and we'll get back to you in the next month's call about all this.
Okay, so following up to what you have said, like you have mentioned that there has been increase in the raw material and raw material prices. So how well are your contracts protected from this volatility in the input cost and raw material cost? And is there any are there any clauses that protect you from this volatility? For example, there are price variation clauses. So are there any similar kind of clause that protects you?
Yeah, there are price escalation clauses based upon the tender and based upon the nature of works. There are some works which, if we are bidding the tender which is lesser than a year, that was not covered in price escalation clause. Only if the duration of the work is more than 12 months, that is 13 months and more, price escalation will be there. And that also, one thing, there are things. Price escalation will be applied. Previously, price escalations were applied only on the final bill. Not every bill will be applied. We have to work and produce the running account bill, and this price escalations will be calculated and provided to us in the final bill only. So in this time also, when we were doing some works, price escalations were not provided. And in state government works, there is only a cap of 5% variation in price escalation. After that price escalation of more than 5%, it has to go for a revised administrative sanction, which will take some time for the sanction to come. So there is a chance. There is a brighter chance for us to get that price escalation, but it will take some time. That will not happen immediately, due to which the cash flow will be affected and nothing much in the margin.
Okay. Thank you so much, sir.
Thank you, sir.
Thank you. Next question is from the line of Murtaza from Pinpoint X Capital. Please go ahead.
Hi, sir. Good morning. Am I audible?
Good morning, sir.
Sorry.
Very much audible. Yeah.
So thank you for this opportunity. Starting with just, I wanted to understand that earlier we were guiding for roughly 500 CR. So the key reason for the shortfall, is it just the billing cycle, or were there some order execution delays or something else?
Sir, we have achieved 500 CR in practically, but theoretically, when it comes to the books, we could not book it. See, we have done 440 crores, and our unbilled revenue stands at 70 crores. This 70 crores, which normally when you see that, always Q4 will be very much high on our side. But this is due to this the certain scenarios where we could not complete the works entirely, and we could not achieve that milestone because it is all due to these external factors like the price increase of this bitumen and non-availability of bitumen. Bitumen was availability was very scarce in the last month. Normally, if it would have been done, our margins in our milestones would have been achieved and these billings would have happened. So these billings could not be done. Well, actually, what we thought this year, we wanted to close our unbilled revenue and the work in progress at lesser than 20 crores. But this did not work out, and this took a toll on the earnings. So on an average, we have done 500 crores, which could not be billed up.
Right, sir. So we can say that execution of 500 CR was done. It was just the billing cycle, which because of which we are not sort of able to see that number.
Yes, absolutely correct.
Right. And sir, coming up next regarding our order book, what is the unexecuted order book for the year, and what's our guidance for FY27? What sort of inflow are we expecting for FY27?
So FY27, we are sticking on to our guidance of 700 crores, sir. For that, we are doing our best to raise fundraise either through equity or debt. This is well planned, and I have been hinting about the 700 crores from last year itself, and this we will definitely achieve this. Not every year will fall short of guidance. This is the first time we have fallen short of guidance, and this guidance, this will be erased the next earnings call.
Right. And sir, regarding the order book, what is it currently? What's the current unexecuted order book as of?
It's roughly around 500 crores, sir. It's roughly around 500 crores. We have started bidding also after the selections are over and after the things that tenders are coming up, and we will start bidding, and we will try to increase our order book to a phase where we'll be able to achieve in the next year, and we'll have a sufficient order book to face the consequent years also.
Yes. And sir, what is roughly the bid pipeline that we have already booked in?
No, we don't have any bid pipeline. Only two tenders we have participated in. It is in pipeline. All the others we are going to participate in this month. The tenders have been floated, and we are participating in this month.
Right.
Coming month, May and June.
Okay. And sir, what was the revenue split between Tamil Nadu and the other states for FY26?
Sir, as of now, we don't have any orders outside Tamil Nadu. I don't want to comment anything before we get confirmed orders in our hand. We are bidding outside Tamil Nadu also. If everything goes well, we will start our works outside also. But as of now, we don't have any tenders positive in our hand outside Tamil Nadu.
Okay. And sir, and regarding the split in the revenue that we had already done in FY26, so was there any revenue that came in outside Tamil Nadu?
No, sir, nothing. It's all inside Tamil Nadu only. No revenue has been obtained. Till date, we have not gone out of Tamil Nadu.
Okay. Understood, sir. And sir, and regarding, can you give some commentary regarding the finance costs and borrowings? Are we getting some visibility? Just wanted to understand better on the fundraise aspect because the finance cost has slightly inched up this time. So just wanted to understand the trajectory going ahead. What sort of
Sorry, sir.
Sir, I'll reply, sir. Sir, it's okay. Sir, actually, you know that we are actually planning to go for this equity raise soon. So once this share market is little better and all, and prices are better, Most probably, I think by half yearly, once we declare a result, post that we will be going for equity raise. So once this equity raise is done, whatever funds we have taken as debt also as of now, one, two funds are there, which is like a bridge funding for us. So we were just waiting for this equity raise. Once we do that, we will make sure that a chunk of debt what we are having right now, we pay it off. Because anyways, it is like a bridge fund for us, and it is like short term for us. So with that, I think our finance cost will also come down.
Okay, that is, we're expecting post our fundraise will be in better.
Yes.
Will be on a better plan. And lastly, just wanted to understand a little bit regarding since there were elections in Q1. So was in terms of execution, was there any impact, major impact, or?
No, there is no such impact in the difference in government formation or something like that. Execution are going on as such. There is no any difference between the previous thing and now the current scenario also.
Understood. Thank you very much. So just a request from the coming results, it would really be appreciate. I'll really appreciate if we could start with the investor presentation as well. Would really appreciate if we can start with that initiative as well. Otherwise, thank you very much for the detailed responses. All the best.
Yeah. I'll take up this. Normally we do this with the investor presentation. This time we could not do that for various reasons. So we'll do that with next thing. And you can share your mail ID to Rutul. He will be good to share with the investor presentation as well.
Sure, sir. Thank you very much. All the best.
Thank you, sir. Thank you very much.
Thank you. Next question is from the line of Mukesh Manjwani from the Moose Securities. Go ahead.
Hi, sir. Good morning. Am I audible?
Morning, sir. Very much audible, sir. Yeah.
Yeah. Sir, going ahead, would we be able to give the quarterly updates as you have earlier also talked about it? Would it be possible?
Sir, actually, we are on talks with our auditors for this India system, sir. Once we are through that, the migration may happen, we'll try for this, sir. But as all of our investors are asking about this, we are taking a thought about this, and we will definitely try to do that, sir.
Okay. And sir, my only question is regarding the cash conversion cycle. As we know that it is going up year on year. So what we are doing to bring it under control, and especially our inventory days are also, going up year on year. So can you throw some light on that?
Sir, inventory days are higher because of unbilled revenue, sir. Since we are not following NDAs, so whatever sales we are showing is actually the billed sales. Once we start following NDAs, unbilled will become a part of revenue itself, sir. So inventory days will automatically come down because, sir, our inventory is somewhere in the range from 15 to 20 CR actually, not more than that. So once this unbilled becomes part of sales, this cycle will also be better, and I think inventory days will also come down, sir. So it's just a matter of time.
When we would be following that?
Sir, actually, sir wanted to do it in this financial year. But sir, as you know, once we opt for NDAs, then last 2 financial years has to be reinstated and everything has to be done. So we fell short of time this time. But I'm sure we are speaking to our auditors. So we'll start the process soon, sir. So we'll convert it into NDAs this time.
Okay. And in that case, our debtor days will increase. Would that be the case?
The debtor days increased because during this election, sir, this receivables, that got delayed a little. So what we were supposed to receive got delayed, first thing. And second thing, more than that is, in the month of Feb and March, we had a very high billing, sir. And our debtor days are anyways somewhere between 90 to 120 days, depending on the project. So in the month of February, we billed somewhere, I think, around 50 CR approx. And in month of March, we did 75 or 78 CR we did, sir. So this high billing is because of that only, which in the first quarter itself we have started getting the receivable. So that won't be a problem next time, sir.
Okay.
So
And right now, yes.
more than one third of our trade receivables are received in this 45 days itself. We have around 40 crores in the trade receivables in the standalone, but we have received around 55 to 60 in the month of April and May till date. So that is not an alarming factor. Yeah, that is not an alarming factor when we think, because see, when we wait for the receivables to come down, we cannot just like that halt our operations. This receivables, it takes times, and we expected this receivables will be high because of these elections, because people have the tendency not to take risk to get funds from the finance and have it in their accounts for this either highways department or PWD department. They do not want to have it in their department, and at the end of the 31st March they could not surrender the same. So they take lesser amount of funds from the finance department and they won't exhaust whatever it is they have received. And this election year, it will be always like this. And after elections also, the government formation, it all took so much time, and definitely even before that also, when this revalidation happened, funds were in place and we are getting funds on a regular basis. So that was not a point to be afraid of or something like that.
Got it. And sir, now can you throw some light on the borrowings part? Like right now, the debt is the total borrowing amount is 234 crores on consolidated basis. So going ahead, how do you see? Like, would it be in the same range, or we have the goal to reduce it by the end of FY27?
Yeah, we are planning to reduce the debt, sir. You see, we need some funds to keep the ball rolling. So we have taken some debt. It has taken a toll. It has taken a toll on the top line. Bottom line, because of this finance cost. But something or the other, we need funds, so we have taken this. Even one investor has asked me about this pledging of shares. This pledging of shares by one of the directors is done for the volume of 10 crores. The entire 10 crores have been pumped into the system alone. And it has come as a director's loan, and it is not taken for any personal use or some other purpose. So this is what we see. When the market is not giving, I cannot just like that abandon my company, right? I have to work some X, Y, Z. I have to work some way, and I have to do that. And moreover, adding to this debt side, I have subscribed for a warrant of 30 crores, in which I have already done 7.5 crores. So I am monetizing that balance 22.5 crores so that I'll infuse the same. I'm not worried about the share price or something. I know the share prices will come up anyhow, more than what I have subscribed for the warrant. So I'm not worried about that, and I am definitely going for this subscription of warrants at the earliest positively in the first half yearly itself, so that my debt level will also increase. I can repay some debt with that, or else I may use that for my working capital or something which will be helpful for the company. So I'm monetizing that funds, and I'll be getting it as soon as possible to do that same also.
So the pledge will be released in this year itself?
Absolutely, it will be released.
Okay.
Sir, actually, I'll just add on something. Since we don't have the schedule, people will be thinking that we are having too much debt and all. If we just concentrate on standalone, so our total debt is coming somewhere 206 in standalone. I'll just give a small bifurcation of this. Out of this 206, we have 140 as CC limit with our banks. And we have around 15 CR to 18 CR we are having from the promoters itself, unsecured, interest-free loan from the promoter itself. The balance of around 48-50 crores is nothing but the term loan which we do it for our machinery and vehicles. Since we are a heavy asset industry, we own our own fleets and all. So that 48-50 crore is like a term loan, sir. which we have taken from the banks, because you get it at a very cheaper rate compared to, blocking your funds and cash flow and buying it. So it is always better to go for a term loan and take it from bank. Out of that 48-50 crores, sir, I think 32 crores are anyway short term, which we are writing, like will be paying it in this financial year. So if you see, the broad is this only, that 140 CC limit, around 51 crore of term loan, out of which 32 is short term, and 15 crore is from the promoters, which they have put in the company. So this is actually the bifurcation, sir.
Got it. But when now, like, we are targeting around 700 crores of revenue this year, so how we are going to manage, like it would be difficult to reduce the debt if we have such a big target, because the working capital would be required for that.
So definitely working capital will be required. With the increase in the our top line, sir, our CC limits also we can increase, and parallelly we are also going for our equity raise also, and the warrants balance amount also promoters will be putting in, because maximum is for MD sirs only, he has subscribed for warrants. So I think with everything like this, I think it is pretty good, and we are pretty confident that we'll be able to achieve what we are targeting.
Okay, ma'am. Thank you, sir.
Thank you, sir.
Thank you, sir.
All the best.
Thank you. Next question is from the line of NP Analyst. Please go ahead.
Hello.
Yes.
Yeah, hello. Yeah.
Hi, sir. Good morning.
Hello, sir. Good morning, sir.
Only one request, Rajesh, please use your hand.
Sorry, you are not audible to me.
Please use your handset mode.
Am I audible now?
Yes.
Please go ahead.
Okay. So, sir, my first question was regarding the margin. So, consider for this year that we are targeting a top line of 700 CR. So, what kind of margins would we be comfortable in, which you think that we can confidently achieve? I'm not saying that we should be targeting for 11% or 12%, but where it should lie for this year, because the bitumen prices are still high and it may remain high for, let's say, for the next 6 months or maybe for an year as well.
Sir, we are on a stage that we just want to target it to maintain at this 10% minimum, and to not to comment or commit anything above 10% because of this geopolitical tensions. So, but 10% would be achievable as to what we have. We have worked out, or whatever we have calculated based on that, 10% would be workable.
Okay, so you mean even with the price hike in bitumen as well as our, our debt level, so paying the interest and everything, 10% should still be achievable.
10% will be definitely, it will be there. 10% will be applicable. As this escalation clauses, the government have come up with some notifications, and also this, because of this geopolitical tension, the government has, NHA has come up with a circular for this escalation clauses, how the things has to be followed, and also these are all positive things, and that will definitely behold to that 10%.
Okay. The second question, I guess you mentioned that in our balance sheet, the receivables were at 160 CR, and now we have almost received 55 to 60 CR. So they are at 100 crore as of now, right?
What is that, sir?
From the receivable side, sir, I think they were at 160 CR towards the end of March, and as you mentioned to a question earlier, that we have received 55 to 60 CR out of those 160 within April and May.
Correct.
Okay, sir. And the third question would be regarding the bidding pipeline and on our order book side. So when can we expect like the new orders coming in towards our side, basically?
So the tenders across Tamil Nadu will be started now. 2 or 3 NHA projects have floated, and all the other tenders would start floating only from the month of June or something. So we can expect something in the first half of Q2.
Okay. And do you think the same margins can be maintained in those new tenders as well? Like,
Yes,
if I quote,
absolutely. See, if what will happen is the prices of this increased prices of the bitumen will be taken into the estimate while preparing. So any tenders which are floated from now, this will have the new cost implemented into this. So that will not be a problem. Again, whatever price increase will be implemented in making the estimates, and that will not have an impact on the profit margins.
got it, sir. That's good to hear then. The last question would be from the fundraise side. So, as you know that the stock price is really down as of now. So,
Yeah.
and it may take some time to come back up, and we may be, in a situation where we can't raise the funds as of now, right?
Yeah.
So, given that scenario, do you think that we can sustain for next 6 months or 1 year if the fundraise does not happen with that and with everything?
So on the funnier side, I'll say that we know to build roads, but we don't know to build this balance sheet. I've learned that building a balance sheet is more hard. It is a way to do things. People look at only balance sheet and not about the efforts and results of the company actually. So they just want day one result. Any company cannot day one result, and all the company will not be giving positive result day after day. There may be shortfall. There may be one. If there is a dip only, there will be a rise. So this the investors should have in mind. But I don't know what are all the mindset of all the investors. And again, when coming to your point, what I say is, even if the fundraise is not happening, we are on the hunt to make any debt rise actually. Because maybe the debt level increases, maybe the bottom line will be decreasing because of this finance cost or something. But at the same time, our target will be the same. We have to reach it. What we are planning is we have to reach it either with the help of equity or with the help of debt. So we are planning in some way or other. If equity is not happening, we'll go with the debt. But I hope that investors will have some confidence in the company and will bring back the prices for us to go for the equity rise.
Got it, sir. And are we still looking to raise it in the range of 160 to 170 as we guided earlier? Like the stock price should be at 160 to 170?
Yes, minimum at that price.
Got it, sir. Got it. And
not
one request from
diluting at this current price is not good for me again. This I did it 2 years ago. I cannot do the same again after 2 years.
I get that. I get that, sir, and I am in support of that. But we should not be raising at least on this price range because we have come so far within this.
I will instead buy back myself.
Definitely you should do that, sir. Definitely you should do that. One request from my side would be, sir, given that we have all these discussions, right? So as the earlier investor have also asked for that, if we can provide a PPT with all these details like the current debt breakdown in terms of CC limits and term loans and everything like what we are planning, I think that will be helpful for everyone from the PPT side.
Yes,
if we can
definitely. We are working on that. We have a detailed PPT presentation getting ready. It could not be done today. That is the reason we could not have the investor presentation ready. It will be presented to you very shortly. For all the investors who wanted this to take it, please just drop a mail to company or Rutul. We will get it done to you at the earliest.
I would say, sir, upload it to the exchanges so that it could be, available to everyone who wants to see.
That sounds good also. We'll do that, sir. Thank you.
Yeah. That's all from my end, sir. All the best.
Thank you, sir. Thank you very much.
Thank you. Next question is from the line of Murtaza from Pinpoint X Capital. Please go ahead.
Hi again, sir. Sir, I just had a handful of questions more. Just wanted to understand better regarding the capex we have done this year and what kind of capex are we planning for the coming year?
Priyanka, can you help me with this?
Yeah. Sir, actually, CapEx, I think we are having enough of fleets and enough of asset as of now. Even if we expand and we are looking and eyeing for a turnover of 700, so we can actually shop our assets from one side to another. And as of now, we don't have any requirement for CapEx. But again, sir, it is difficult to say anything regarding, again, which location we are going to get, what site and all. If at all required, we will go, and whenever we go for any capex, we always go through term loans. It is easy for us also. Rate of interest is very it's very low compared to giving the entire cash flow and blocking a cash flow of buying an asset. So as of now, we don't have any plans. We are enough whatever fleets we are having, whatever assets we are having. But again, it is all depending upon in the future which project we are getting in which location. So since we are actually planning to expand also out of Tamil Nadu. If at all we think that we need a set over there, or we will buy it, or else we will hire the machinery then and there. So as of now, no plans for capex. So.
Understood. And roughly, if you have a ballpark figure for the capex done in FY26?
Sorry, sir. Capex done in what figure you want?
The capex done in this the year which has ended, FY26.
So I think we took around 25 CR if we are not mistaken, worth of capex.
Oh. And another question I wanted to ask was regarding our employee cost. So this year it has roughly increased in proportion with our revenue, roughly 50 odd %. And so I just wanted to understand, as we're targeting for around roughly 700 CR, which is roughly 40 odd %. So will we see the same increase in our employee, or will there be some sort of leverage kicking in over here? Like that is, will be able to do more revenue per employee, or will we have to proportionately increase the number of employees?
No,
So
the
we
headcount has to be increased, sir. Headcount has to be increased. If you are increasing your projects, a team has to be instated totally. We cannot do two simultaneous projects with one team. So we need a fresh team also to be increased. So we will be having the head of operations for each project, and then newly recruited engineers or something like that. We'll shuffle and keep increasing our team. Team has to be increased at any cost.
So will it be in pace with the increase in revenue?
Yes. Definitely, when revenue increases, you have to keep your team increases. See, the number of projects is the thing. When for executing a project worth of 50 crores or 100 crores, we need 15 to 20 members of team. If you are going for another 100 crores, another 20 member of team should be increased or something.
Fair enough, sir. Understood. And then lastly,
I just want to add on in this that whatever increase in employee cost you are seeing, it is all because we hired people for our project sites and all. There is no increase in promoter salary in any ways. I just wanted to add that thing, sir.
Sure. That's understandable. And I would really appreciate if we could get some commentary regarding our PEB vertical, that is pre-engineering buildings, and regarding our solar EPC subsidiary that we were planning. I just wanted to understand what the status is currently as of now, and what sort of outlook are we looking from it, and just wanted to understand that aspect better.
See, solar EPC, we have obtained first order, and we have just started our works, and being the government change has happened, there is some changes in the approval scenario, everything. So we'll be getting the approvals as soon as possible. I could not commit anything on the timeline, but we will start this year. This year we are looking some good orders from solar EPC also. Pre-engineering building, we are at the entry level. We are bidding our best. But since we are very new to this and we don't have any much of pre-qualification, or as we have not done bigger buildings or something like that, it is pretty tough to get into big size tickets. So now we are targeting at smaller thing to build our qualification level, and we are bidding tightly so that we will be getting some entry into that segment. this year. But it is not fruitful till now. So we are still on the run only for that.
Understood, sir. So we have an actual team readily available for PEB. It's just that as of now, we don't have any orders at hand.
Yeah, we are executing one order as of now. This is the first order being given to us, and we are looking for some breakthrough in the short time.
Sure, sir. Okay, understood. Thank you very much. Really appreciate your answers. Thank you. All the best.
Thank you.
Thank you. Next question is from the line of Paras Cheda from Purple One Vertex Ventures LLP. Please go ahead.
Yeah, hello, sir. Good morning. Sir, I just joined in late, sir. So apologies, if some of the questions get repeated. But sir, just first on the receivables bit, out of this 160 crore receivables that were outstanding, how much have we collected in April and May, and how much is expected to be collected by Q1 end?
So out of 160, in that 160, 120 crore is from the standalone. 140 is from the standalone. Out of 140, we have done around 55 to 60 crores. Not exact value, I could say. 55 to 60 crores we have done till date. And in this console thing, another 5 or something we have received. So this is what happened till now. So we are very much below that 120 days receivables cycle. We will be able to receive the entire 160 crores into our books.
So,
I'm sorry, you're sounding muffled.
yeah,
Pardon?
no, sorry. I was saying that out of 160 crores, 60 we have already received is what you're saying.
Yeah.
Okay. And by the end of how much more do we expect to come out of this?
Pardon?
Paras, you're sounding muffled.
Okay, sorry, one second. By the end of June, Q1, what do we expect to further collect? Hello?
Your voice is not audible. Yeah, your voice is not audible.
Paras, we are not able to hear you clearly. There's a network.
Can you hear me now? Yeah, can you hear me now?
Yeah.
Yes.
Yeah. I think out of this, we've 160 message, we've collected 60. Now there is June month also left for Q1. Potentially, how much can we collect in this month?
So that cannot be committed anything. I'll collect 200 or 300 or whatever it is. We are just on the run. We'll be, even if we may collect even the entire 160 or something may be pending outside. But everything is falling on time, and there is no lag in anything. It is all happening on time only.
Yeah, because most of it,
we have some timeline for this receipt also. No? So this is happening on time. Because of this election and all these scenario, there is some slight lag in that, but that is not that much alarming as to our knowledge, whereas we have seen 3 or 4 elections crossed, and this time is no exception. And there is some inevitable delays, but it is not that much alarming.
Okay. So then given that, when do you expect this cash flow from operations to turn positive? I mean, because this year was negative and probably due to milestone billing delays, maybe I would think. So, do you expect to get cash flow positive in terms of operations this year, FY27, or it will still?
Sorry, our trade receivables is around 160 crores, and our trade payables, if you see, it is around 20 crores. This mismatch, see, 140 crores of our profit, our funds are with others. When we are paying people on time to keep our business good, we are paying. If we have much of creditors and much of supplier credits, we can make easily this cash flow positive. But this cash flow negative, I think we are mitigating. First half yearly we have done it, and first half yearly it was cash flow positive only. And because of this, see, we have drained each and every rupee to make the payments for all our suppliers and all our finance, banking, everything. We did not have anything just to have our bank balance high. We just want to make on-time payment for most of this. We do not want to fail in that. So that is what making things this cash flow negative. We are trying to make it positive in the next financial year. The same question you will not be able to. I mean, you may not ask me in the next financial year earnings call.
Sir, I just want to say that conservatively, let us not comment that we will be 100% sure that it will be positive. Sir, always our mission has been that company can at least run properly, and since we are having a good relation with the supplier, so we ensure that at least supplier we pay advance or we pay on time. Sir, I can tell you for sure one thing, that a company having a almost 440, 450 CR of turnover will never have a creditor as low as what our company is having. So the
No.
always.
Sorry, let me come into this one. See, you can continue to grow, and I'll come back to that in terms of revenue guidance, etc. But that growth is coming from balance sheet expansion. It is not coming from cash flows that are generated internally from the business. See, you can pay your vendors on time. That is a good practice. But the point is, unless and until your receivables are on time, you are trying to fund growth out of either debt or equity. And equity will become equally harder unless and until you will become cash flow positive. And that eventually at some point, and the next question was about that, at some point you will hit a ceiling, in terms of how much debt you should sit on, with the kind of receivables that will keep growing up. So there has to be some sort of, sustainable business model wherein the receivables also come on time, at least within a certain period of time. And then you've got payables also. So you got to match the cash flow. You can't fund your receivables every time by debt.
No, I sorry to interrupt. See, when we have some agreement with the government, there is a timeline for the government to pay the bills for us. It's not that we can take. We have to submit the bill and get the payment the next day. But there is. This is not the case when we are taking materials from suppliers. We don't find much of credit. There are periods when we used to get 6 months credit also. There won't be enough takers for the materials, wherein they ask just to buy the materials from them, give them whenever it is possible. But now the demand for each and every material in the construction industry is on the rise. So they demand immediate payment. In that case, if we are not paying them immediately, or if we are not paying them upfront, or if we don't pay on time, there is always a second thought about supplying materials to us. So I cannot take that risk, right? If I have to run my show, I cannot wait for 90 days for my receivables to come and then pay the supplier and then take the material. Then my cycle will not be there. In that case, we need to go for other debt or something. It will not be the same thing. Operational cash flow will be negative in all the ways. But we are trying all the ways. When we get some payments, say now we have received some payments out of that, and whatever if we take the balance sheet, if you just add April and May to that, and if you see that now it would have been in positive, or if at least the operating cash flow would have been not 18 crores and it would have come down drastically. This is how it happens. We cannot just because in construction industry, each and every contractor or each and every person who is aiming for billing will do their billing in the last quarter. So there is a huge demand in the last quarter, and there will not be any credits in place. Even when we are taking Indian Oil bitumen from Indian Oil Corporation, we were given 7,500 rupees discount, and it was stopped in the month of March because of this availability and because of this price hike. When there is a demand, there is no need for them to give the discount. Overnight they stop the discount, but overnight we cannot stop our works, right? we have to get on to the work. We have to keep the system flowing. So 7,500 rupees. Yeah.
Fair enough, sir. I have understood, but sir, this is not the first year we've been cash flow negative. I understand this year has been, quite volatile in terms of construction material demand also. But for the last 3 years from FY24, our cash flow from operations have been negative. So somewhere...
Sir, FY25, I just want to clarify one thing. In FY25, we were 9 CR negative in cash flow, and the major reason was because we had a chunk of creditors which we have to repay, and we repaid 33 CR of creditors in FY25. That was the main reason why our cash flow was negative in FY25.
No, I am talking about cash flow from... Sorry, I am talking about cash flow from operations.
I'm also talking about cash flow from operations.
Yeah, I'm talking about the working capital.
Sir, 1 second, sir. If you have the balance sheet in front of you, you are telling me payment of creditor is a financing thing and not a operational thing.
Short-term borrowings, if you're talking about.
I'm not talking about short-term borrowing, sir. I'm talking only and only about payment to creditors. If you have
that is a working capital thing. Yes, that is a working capital thing. Correct.
That is what I'm telling. If you have our financials in front of you, I'm not having it right now, but for financial year 25, as far as I remember, 9 CR was the negative balance, in which 33 CR we cleared in that financial year, sir, for payment of creditors.
Cash flow from operating activity in March 25 was 16 crores negative. Right, and your payables was 30 crores that time.
Sir, I'm talking about financial year 25. If you don't have, you please share me your email ID. I'll share it with you. Financial year 25, operations from cash flow was 9 CR negative for us, in which we have repaid around 22 to 30 CR to our creditors, sir. If you want, I can send my financials to you, sir.
Why are you getting so excited? I am looking at
I'm not
the number.
excited, sir. You are misquoting and you are giving a numbers which is not true, sir. This is a call where every investors are listening, and that is why I'm telling you, if you don't have the facts in front of you, sir, please don't argue on this.
Okay, no,
the
fair
9
enough.
CR was negative cash flow from operations in financial year 25.
I am just...
Can you share your email ID?
We are not debating. Okay.
No, it's not a debate. I just wanted to clarify. Just share your email ID so that we will send you
I am also an investor in the company, so I have no other...
Understood, sir. It's not that, sir. It's not that, sir. We wherever, whatever you have any doubts, you just share me.
Yeah, I'm just discussing that from an open operating public platform only. Okay, we can reorganize the number. That is fine. The broader point, simple, is that however much you like it or don't like hearing this, the angle has been that the cash flow operations has been negative. You see, I am also an investor. I am also equally worried. So there is no discussion in terms of I am highlighting wrong numbers, etc. I think the entire community of the investors on this call can tell me whether the last 3 years have been cash flow negative or not in terms of operations.
Last 3 years, sir. Last 3 years.
FY26, FY24, FY25. Cash flow from operations have been negative. Am I misstating this fact?
Sir, you are not misstating the fact, but the numbers you are quoting where
okay, let's forget the numbers. Okay, you may be right. You may be right with your 9 crores numbers. Priyanka ji, you may be right with your 9 crores number. Let's put it that also. I'm open to that as well, right? What I'm talking about, generally speaking, is the sustainable business model practice. I'm also an investor in the company, also equally worried. So we are just highlighting something that you should be looking at. The final fine-tune numbers we can discuss separately. That's fine. If you're operationally positive, any which ways it's good for us. And for the management.
We do not claim that we are operationally positive for the past 3 years. For a company, for a growing company like us, you cannot expect 100% operationally positive things. We are trying our level best to bring it to operationally positive. We have done that in the H1. We just wanted to maintain this year. But this year, due to this high debtor and low creditor, we could not achieve this. If we would have received maybe around 40 or 50 crores extra, we would have we would have been in a cash flow positive situation. This is all inevitable. If you want cash flow positive, then my top line would have been lesser than. If we have to see, anything has to be sacrificed for something to be attained, sir. We are not saying to achieve everything, right? What I am looking after is I want the top line to grow. I want the bottom line not to decline. And then I want the company to grow. I want the creditors to be paid on time. I want the banks to be paid on time. This is all I am concerned. See, end of the day, after March 31st only, I'll just check whether it is what is happening and this operating cash flow negative or operating cash flow positive or all the sentence or statement I am hearing for the past 2 months only. I am of the mantra that I should do business, pay my suppliers on time, pay my workers on time. This is all the mantra I know and I have learned. I am working on it. If that is making me, if I am done my best to pump in all my A to Z money into the company, and we have taken loans. We have also pledged our shares and put that 10 crores also into the company. Everything we are doing it for the growth of the company alone. We are not just looking this company that I am taking my part on this. This whatever salary of 10 lakh or 12 lakh will not is not sufficient for me to stay happy at my home. I want this company to grow big. I want this company to do wonders. This is how I have been brought up, and this is how I am doing things. So this operational cash flow things, I humbly accept your point, and definitely a point taken, and we will work on that. But in case if this is to be brought to operationally cash flow positive on cost of something else, I am against that again.
No,
I am in this forum, and
I'm just highlighting. Sir, I fully appreciate, acknowledge the efforts that, as promoter family and your commitment to the company. I see everything. So there is no point. I completely agree with every other thing. I'm just trying to highlight. So just to grow at the moment. So the next question is, sir, okay, we are growing, and which is very good, right? So now we are stuck with raising equity for now, right? And the short-term borrowings have gone up. I presume the long-term is anyways close to flat. Let's put it that way. Now my question is, sir, okay, what kind of debt to equity are we comfortable saying? Okay, up to this debt to equity, I'm okay taking further leverage if I want to continue to grow. Because what I'm trying to highlight is that yes, the growth, definitely every investor wants to see growth, correct? But that growth, the cash flows to fund that growth is not coming from the business. It is coming either from debt, or if at some point equity is raised, equity will come in. Now, since we are in a situation where probably equity will not be the case, it will be debt. So my question is, sir, at what level of debt to equity are we comfortable going up to?
Sir,
currently, we have got 43 crores long-term borrowings, and short-term borrowings is 192 crores. And my understanding, sorry, I joined the call late, so I heard just that probably for FY2027, we are looking at about 700 crores of top line, if that is correct on console, right? So that's quite a good growth that we are targeting. Now, to achieve that kind of growth, what kind of short-term borrowings or long-term borrowings are we looking at in that debt to equity ratio? That is the only question, sir.
Sir, if I may ask, we have hit this public forum, and we have entered into this capital market when my top line was 100 crores. Okay, it was in the 100 crore bracket, and we have taken the IPO money of around 53 crores.
Right.
Okay. Our investment at that time were roughly around 25 to 30 crores or somewhere in that range. Okay. We have grown 4 times. And do you think that 50 crores of equity would have been sufficient for us, or whatever invested would be sufficient for us for this growth without taking any debt?
No, sir, barabar hai. You've grown debt. I am not saying no. Barabar hai, you've grown well. I'm thinking now when you grow further from here.
What my answer is, either the growth has to be supported in the form of equity or in the form of debt. When there is no point in taking equity or diluting at this price level, we are going for debt.
Right.
If I'm falling short of my guidance of 500 crores, even though when I explained that this is the reason, then also there is a question arising why the company is falling short. Company is not walking the talk. And if we are wanted to grow at this point also, then questions are arising why you are taking too much of debt. So there should be some proper understanding in the system. Either you say if you have to catch the bus, you should run. If you cannot run, at least you should walk. You cannot sit at a place and you want to catch the bus.
Sir, we are with you. I'm just trying to say, okay, suppose you have targeted a growth, which I also support you, sir. You have to look at some growth. I agree. Now my question is, okay, what level of debt to equity ratio are you comfortable going up to? Okay, by this is the ratio that, because banks also at some point will think up to what level they'll fund you. But assuming the banks are ready, what level are you ready to go up to? Is my question, sir. Debt to equity.
So we'll try to keep it below 1.5. But again, if equity raise is not happening because of the share market, it might go up. That also we are not commenting, but we'll always try to keep it below 1.5. Right now it is 1.23 for us. We'll keep it below 1.5. So
anyhow, I am going to subscribe my warrant. That will also reduce this ratio.
Debt equity ratio.
So debt equity ratio will be reduced if I subscribe my warrant and convert it into share. That will also reduce this debt equity ratio.
So if I, without offending you, sir, are you sort of prepared to subscribe to your warrants completely, which were at 200? You will probably exercise that at some point.
200% at 200 rupees.
Understood. So that shows your commitment to the company clearly. I mean,
Sir, I know my share will not be the same. When we entered, it is 75 rupees, and we went on till 265 rupees. Now again, starting from 25, it means 75 rupees. It's not going to be the same again. We will go back to the place where we left off, and we will go much beyond that. I have the commitment in the company, and I have belief in my team and people. So we can do wonders with this. I know.
Understood, sir. Understood. Sir, just one thing, just to reiterate, your FY27 guidance is about 700 crores. Is that correct, sir?
If you want to write it on a bond paper and give, I'll write it and give it to you.
No, sir. I just joined in late.
Yes, on a lighter note. It's on a lighter note. I'm telling you, it's 100% we'll do that.
I just joined in, so I overheard. So I said, okay, just wanted to confirm. If that's the number for FY27.
Yes, sir.
Achha. Sir, I mean, typically, what's the order book as of now, as we speak?
It's around 500 crores.
500 crores. Fair enough, sir. And just last thing, I mean, from my end, sir, and I know this is anyways not the optimal time for equity raise. So, what my understanding is, at least hopefully, as you've committed, that probably you'll go ahead with the warrants exercising. So that brings in some bit of equity into the system. And at some point, let's say, if the equity markets probably doesn't support us, any alternative funding plans do you have other than the higher debt that will go up to? I mean, any other idea that has come across or something? Any plans?
We don't have any such plans as of now, sir. We are looking for this debt funding as of now. So equity, we are planning definitely once this markets get better. We are dependent on either of these two, or we are also in talks with some people for this NCD options. So if that is going to be NCDs at better prices, we are looking at that. If that is also not possible, when some prices somehow if it increases, we are looking for CCD options also. So these are all the options we have open with this. So my consultants are working on this. They'll be getting us some better result in this.
And the operating margins, EBITDA margins, about 18 to 20% is workable?
Yeah,
given the rise in the fuel prices, etc., everything?
Yeah, it will be sustainable and it will be workable, sir.
Understood, sir. Fair enough. Thank you so much, sir. Thank you very much.
Thank you so much. Thank you.
Thank you. Next question is from the line of Hiren Modi from Balakrishna Family Office. Please go ahead. Hiren, your line is unmuted. Please go ahead with your question. Since there is no response, we'll move on to the next question from the line of Rajinder Passi from NP Analyst. Please go ahead.
Yeah, thanks for the opportunity again. Am I audible?
Yes, sir, you're very much audible.
Sir, one question would be, in the previous year, we had a lot of orders, but those were like smaller orders in the range of 30 to 50 crores. And towards the end of the last financial year, in March, we got 100 CR order, in which I guess it was in a joint venture, and we had, I guess, 74 or 75% of ownership on that. So going forward, can we look at some big ticket orders, let's say 150 to 200 CR worth of orders, so that we can grow our order book to a substantial amount that going forward we can have a meaningful growth even for the subsequent years. Let's say if we are doing 700 for this year, we may be targeting for 850 to 900 for next year as well, and things like that. So for that, we need to grow our order book substantially. So any thoughts on that part from your end?
Sir, we are targeting at orders of 100 crores size only now. So even though the smaller orders which are nearby our vicinity, we are getting it, and we are bidding for that. We are targeting at order book of 100 crores and more only. This order which we have mentioned of 100 crores, 74% ownership is just for bidding purpose. We have done that, and the entire 100% of work will be executed by us only. So this all the profit and losses will be towards us, and it will be a minor 2%. What you call 2% royalty charges for that 24% of their share. So we'll be doing that also by us, and it will be a back-to-back one. So 75%, entire 100 crores will be us. So we are targeting at something in this range alone. So for some technical collaboration, we are taking this JV things.
Got it. But what is the maximum technical, orders we are capable of, like where we fall in that bracket? Is it 100 to 200?
We can do around 300 crores, sir. But there are it was bridges, so wherein we need some particular quantity exercises to be executed before, where we were short of. So we have asked them. For that reason only, we have been the major stakeholder of 74%, and being a minimum stakeholder should be 26%, we have added them as 26% stakeholder.
Got it, sir. Got it. But as of now, we are looking to target 100 CR orders, right?
Yeah, maximum is around 400 CR to 500 CR, and minimum we are targeting at 100 something.
Got it, sir. And what are our internal plans on the order book side? Like, where do we see our order book towards the end of this year, or how much orders are we looking for in FY27, the new orders?
Apart from the current unexecuted order book, we are expecting around 500 plus this year also. So anything between 500 and 1,000 crores, we are trying to have it in our order book kitty.
Got it, sir. Got it. And my other question would be regarding our bank limits from the fund-based limits as well as non-fund-based limits. Like what are the total numbers, and what is the current utilization on that end?
Yeah, Priyanka, can you just...
Sorry, I didn't get your question, sir. Can you repeat?
Priyanka, can you provide me the bank fund-based limits as well as the non-fund-based limits?
Yeah, sure, sir. So, sir, fund-based, we are having 140 crores, and non-fund-based in the form of BGLC, it is around 85 crores, sir.
And have we utilized them completely, or what is the current?
No, sir. Sir, we are actually nowadays, government has started taking surety bond. So we always prefer surety bond over BGLC. So we have not utilized it. Around, I think, 15-20 crores are utilized, sir. The rest are all unutilized.
And what about the fund-based limits? Has that all been utilized?
Yeah. That is all. We have utilized 140 crores.
Okay. And are we in discussion with the banks to increase it, or to have a bigger limit on that side?
Sir, as our turnover will increase, we will definitely, banks will be open to increase that limit also for us. And as you know that the rate of interest is also very less. It's around 8.5 to 9% only. So anytime we go for debt, our first choice will be CC limit itself. So I'm sure that as top line is increasing, sir, we also, I think I made an announcement that our company got one notch higher also in credit rating.
Yes.
So we are triple B plus. We from triple B plus we are triple B. From triple B we are triple B plus right now. So I think keeping in mind all the factors, I'm sure bank is okay if we increase our CC limit, sir. And other than that also, sir, we are having some scheme coming up from the government in form of LGS scheme or something new has come up. So even if we are eligible for that, we will apply for that as well, sir.
Got it. So these new schemes are regarding this current geopolitical situation, or these are there to stay basically?
Sir, about the scheme you are talking?
The one that you mentioned, I guess, some kind of bonds, and then this new scheme which you are talking about right now.
No, sir, I'm sorry, I didn't get you. You're talking about the scheme or you're talking about debt, sir?
No, my question was, given the current political situation, right, the geopolitical situation.
Yes, sir. Yes,
are
sir.
we seeing some extra, support from the government as well as the NHA during this time, or how the things are from that end?
Yes, sir.
NHA has come up with some schemes like, okay, this escalation factors, they have given some sort of relief and other things like some sort of schemes have come up for the billings also. So earlier when the billing cycle was high and the escalations will be calculated on the final bill or something like that. Now they have introduced something like they have given an instruction to all the regional offices to calculate the escalations on the running account bill system so that it will be easier for the contractors. These are all the basic things and nothing else.
Got it, sir. So if the price escalation happens, then that is going to be catered within the current bill itself.
Yeah. It will be taken in the current bill itself. Yeah.
Okay, sir. That was all.
Thank you, sir.
Thank you. Next question is from the line of Hiren Modi from Balkrishna Family Office. Please go ahead.
Am I audible?
Yes, you are. Please go ahead.
I'd like to congratulate the management for good set of results.
Thank you, sir.
And
Thank you,
yes,
sir.
and to you and the ma'am, very patiently you are answering in very good detail to each and every the caller who is there. I was thoroughly listening everything, sir. And I understand totally that in this industry, sometimes the billing gets carried on and maybe the target of 500 crores is not hit directly, but it is there. So I just wanted to make a point where you yourself have answered it, that when you started with 100 crores, you are very much clear to pay your suppliers on time, to commit your business and your workforce and everyone to be punctual in each and every way. But now the investor fraternity has been added in this journey. So, sir, you yourself told that you are good in building the roads, but you are trying to learn to be good in the balance sheet. So I certainly have faith in you, sir, that coming ahead you will be up to the best mark in this balance sheet one also, where everything will be very much clear for the investor also, and that will be helpful for our share price also, sir. So my first question is, sir, regarding what is the time frame that we have kept for the equity fundraise? Maybe by the quarter 2 or by what is the time frame?
So thanks for the appreciation, and I accept all your views, and it's good to hear from an investor about things. And about the equity rise, we are planning something before Q2, end of Q2 to happen, sir.
Okay. So that means I should take it that if it happens before Q2, it's good, or else you'll go for the alternate routes, right, sir?
Yes, sir. We are always arranging for some bridge funds. Even if it is going to happen in Q2, we will be paying back our debt or paying back our funds what we have taken. But we are not stopping anything for this equity raise. But if it happens if investor gets the confidence about the company and if they increase the share price or something, and if we get it as early as possible, company will grow well and definitely will do good. Do good in the whatever we have committed or something like that.
Okay. And sir, regarding moving out of Tamil Nadu, so what are we doing something over there in that area? Have we appointed certain specific targeted team where they can work out for the tenders and the related, as the way the Amravati project is going to come in a huge way? Just an example I'm talking about, sir. So are we working somewhere to move out of Tamil Nadu, maybe out of the 700 crores that we are targeting? How much portion that you are thinking should be out of Tamil Nadu, or yes, you can throw a light on this?
We are targeting to go out of Tamil Nadu. We wanted to enter other markets also. But whatever 700, what we have committed is 100% within Tamil Nadu only. So let's see, I don't have any reach as of now. We started bidding outside Tamil Nadu 2-3 months ago, maybe around 6 months ago. And we are conservative in our bidding. I'm always conservative. And we could not get L1 status in many things. And we are still bidding and we are still looking for good projects to come up. And we just do not want to take a hit on our first or second project in other states. So we just wanted to have a clean entry. And definitely this year we are hopefully positive of getting into other states.
Okay, sir. I will once again congratulate the team, sir, and I will expect that we grow 10x from here, sir. Thank you.
Thank you, sir. Thank you very much. Good day.
Does that answer your question?
Yes, yes, sir.
Oh, thank you. Next question is from the line of Umang Adatia, a private investor. Please go ahead.
Good afternoon, sir. Actually, I have follow-up questions from my side. I want to ask about cash flow only. Sir, our operating cash flow from last 3 to 4 years was around negative 50 crores. And our cumulative profit PAT gone around more than 100 crores. So the gap between was 150 to 160 crore of working capital. Okay. So this is only a follow-up question. What is the immediate liquidity coverage ratio of our company? I mean, what is the company's cash flow plan?
Sir, are you asking that what company are taking as measures to ensure that the cash flow is proper? Are you asking about that?
So actually, you mentioned that 55 to 60 crores is already received from debtors, plus a 30 crores of commitment from promoters of warrant exercising, comes to around 90 crores. And our short-term borrowing is around 170 to 175 crores. So what are we planning, or what are we taking measures to address that gap?
Sir, first of all, warrants, what you're talking about will be done in a phased way. We have time till March 27, so we will be doing it in phased way, first thing.
Okay.
So second thing, as far as this short-term borrowings is applicable, CC limit, sir, out of this 172 crore, CC limit is 140 crore, which is also a part of short-term borrowing, correct, sir? So that, sir, we don't have to repay the entire 140 crore. It comes as renewal every year. So every year when we go for renewal, we either get enhancement or we get the same level. So since our top line was increasing, banks have given us this thing from 75, we got into 140 last financial year. This financial year also we are expecting that bank will, seeing our eyeing the top line we are going, banks will definitely give us some sort of enhancement in CC limit. So the short-term borrowings you're talking about 172, out of which 140 is CC limit. The remaining 51 CR is actually term loan in which we have taken for our vehicle and machinery, which we are going to repay in this financial year. This is what short-term borrowings is all about, sir.
So, ma'am, one follow-up question. what is your contractual or operating mechanism to bring down working capital days or day sales outstanding below 90 days in FY27? I mean, can
Sir,
you...
yeah, sure. Sir, in our industry, sir, debtor days is 90 to 120. It's like a common practice for any EPC contractor, depending on the projects that you are taking. So that debtor days we cannot help, sir. That is the thing, something that the entire industry follows. And as far as inventory days, when inventory days will come down, I think this working capital cycle will be better. It is because we are not making this unbilled revenue a part of sales. That is why inventory days are so high. Once we start following Ind AS, this inventory days will become a part of revenue, sir. I mean the unbilled revenue. You will see a change in the working capital cycle. It will not be this much high, sir. In this financial year, we are working on it. We spoke to our auditors. We are shifting into Ind AS, sir. After that, you will not see this much of gap in working capital.
So actually, I was listening to that engaging conversation. So the question hovers around that only. What are we planning, or what are we taking measures to address that cash flow issue only? Don't you think that it will be, as promoter, as addressed, that we won't be dilute via QIP at current prices? And you also mentioned that due to stock market volatility, we won't dilute at current level. But at certain point of time, if there is a cash crunch going forward for the company, don't you think it will be a somewhat of value destruction for existing shareholders? Can you address that?
Sir, I just want to request you something. I want you to stand in the shoes of promoter and look it as your own company and just answer my one simple thing. If you were a promoter, sir, you had issue warrant at 200. When it is coming to dilating your shares, will you do that at a price of 75, 80? I don't think, sir, anybody will do that. And sir, this share market, share prices is something which is not in the hands of management, sir. We are trying our best to maintain the PAT margin. We are trying our best to increase the top line and achieve what we are actually telling. But if you come for dilution of shares, sir, I don't think, sir, tomorrow I'm telling you, if promoters take this decision and started diluting at so low price, investors will come up and question us that on basis of what are we diluting it at so low a price. So if you see, it is actually not good if promoters dilute at so low prices. That is the reason they are waiting for prices to be up, and we are confident, sir, that maybe this is because of some geopolitical reason or for whatever reason. The prices are low. I'm sure it will go high. And also I want to add on that our 3 years will be completed in NSE by next year, March. So March financial 27 will be migrating to main board as well. So prices will definitely go up, sir. So unless prices are little, if it's not better, I don't think diluting at so low a price will be a good call for anyone, sir.
See, ma'am, actually what the promoter also mentioned that showing commitment at exercising warrants at 200 rupees is also a commitment. But and also another thing that promoter mentioned, that they are doing everything possible to pay in advance to suppliers also. That is also a commendable thing. But we as a company, we need to look our finances also. See, I'm not telling that company is going to face situation. I'm just asking a honorable question that if at a certain point of time you are on a cash crunch, I'm not telling or asking you to give me a ballpark number. I want to just understand the trajectory a company is going to follow.
So if we at all have to face that cash crunch and all, we'll make sure that the receivables are there within this cycle of what we are maintaining. And also we might go for bill discounting of debtors, which we have not done till now. So we might look into other options as well. But as of now, we are confident that the market will be better. We are confident that we'll be raising some equity by half yearly, and our debt will also come down. And because we have taken some bridge funding, so once we raise that equity, this debt will also come down. Plus, warrant sir is going to subscribe Once warrant is there and the equity rises, so debt to equity ratio will also come down. So these are something which we are confident. But other than that, if it is not happening because of some for some unforeseen circumstances, then we will be open to discounting our bills also. That also we can do it, sir.
See, as a management, you are committing or you are guiding for 700 crores of top line. That's not. I'm not going to doubt that. But you also need incremental funds. So in market also for incremental revenue, you need to borrow extra funds also. So understand my point. In going ahead, you will face a situation in bottom line part of P&L also. Will you agree to me?
And I don't get your question. Can you just repeat, sir, please?
Sir, I am just talking about rising finance cost going ahead. If you are committing of going 700 crores of numbers, you need extra funding definitely. And you also told that going forward, QIP also in line. So if QIP is not coming, then you have to raise extra funds via debt. So finance cost will definitely rise. So the net margin of 10%, I doubt will it be sustainable or will it be going down? So that's my point.
This debt funding, what we raise, will substantially be increased, and the financial cost will be substantially increased. But that will be substantially increased in line with the top line expanding, so that whatever funds we are having, whatever debt we have taken is for the value of what we have obtained till now. So there won't be much dip in the bottom line as you observe, and I don't think there will not be any dip in the bottom line.
Okay. So thank you, sir.
Umang, I request you to join back the queue, please. Thank you. Ladies and gentlemen, we request you to restrict to one question at a time, please. The next question is from the line of Paras Chheda from Purple One Vertex Ventures LLP. Please go ahead.
Sir, just one query, or rather one observation I just wanted to point out, sir, and just continuing from the previous gentleman's perspective. And sir, in March 23, our consolidated revenue was 115 crores. In March 26, we have grown to 441 crores, right? So there is 3-4x jump in the revenue. Now, let's come to the balance sheet, sir. The trade payables in March 23 were about 42 crores, right? And even in March 26, our trade payables is 43 crores. Now, there has been 4x jump in the revenue, right, to 440 crores, but the trade payables absolute quantum remains about 42-43 crores. That was flat, which is a good practice, let's put it that way. Now, our trade receivables have grown from 11 crores. So what I think the previous gentleman and also I am trying to imply, sir, yes, the accessibility to debt may be there. You are showing good commitment in terms of, bringing in equity, etc. All that is fair enough, sir. But at some point, these payables also, at some, vendors also you'll have to, extract some from them as well. That if you've grown 4x, your absolute payables still remain flat, whereas your receivables grow from 11 to 160 crores. Obviously, you are funding that working capital from either debt or equity. And in markets where equity is not accessible, you will have to be forced to go to debt. So how much can you grow just on the back of debt and equity without balancing the business and trying to say, the vendors also need to come in here and you take some credit period from them as well, because you are seeing growth and they also in turn will also witness growth through you. At some point, they should also participate in this, because the interest cost is borne upon the company and the PAT margin will suffer. And for you to grow at any point in time, you will just be dependent on external capital, which may or may not be available, and it will be always subject to, the external environment. Whereas if we manage to balance the business in some way where it is sustainable, your...
Sir, is your question
You're
done?
sounding muffled.
Yeah. So once you balance or you try and attempt to balance the business, you will be able to come in a situation where your dependency on external capital is reduced and your PAT margins also do not suffer. So, it's a point to rethink about your entire working capital management, sir, in terms of growing. I mean, the growth of the business is fine, but I think the growth is coming at a different level of risk. If you extrapolate this, another 2, 3 years, 5 years down the line, let's say if you want to grow from 440 crores to about 1,000 crores of revenue, and if you continue to maintain trade payables about 40 to 50 crores odd, imagine the kind of trade receivables that you will have to fund from debt or equity, and that comes only from debt or equity, and equity also will be subject to market conditions, so it will be predominantly debt. The business model itself will not be sustainable, sir, if you understand what we are trying to highlight here.
Sir, can I your question is that no, sir, 1 minute. No, sir, 1 minute. Let me let me just finish one thing, sir. Paras sir, I just have one request to you, since it is something which all investors are listening. Can you please not quote wrong figures again and again? Sir, supplier trade payable for us right now is not 50 crore. For trade payable right now for us is 20 crore, sir. In financial year 25, our trade payable was standing somewhere 16 crore, where we had a top line of 272 crore. In financial year 26, we are having a top line of 420 crore standalone, and a trade payable standalone I'm talking you is around 20 crore, sir. It is not 40-50 crore.
Fair enough. So okay. So let's go with your numbers, okay, Priyanka ji. Now try to tell me your revenue has grown 4x, right, over the last 3-4 years, correct? Now, how much has the trade payables grown with your numbers, going by your numbers?
So that's what I am trying to say, that a trade payable has not grown that much, sir.
That's what I'm trying to exactly.
No,
that is the exact point I'm trying to raise.
Yeah, I understood your point. One second.
Okay.
Yeah, I understood your point. You just wanted.
What I'm trying to say is a different point.
Yeah, I just wanted you to take support of creditors rather than going for the debt. Yeah, correct. I understood the point. Your point is taken, but it is not that easy to get credits of the size of what we are looking for. Industry is growing in such a phase that people who pay first take the product first. We just wanted that discount what we are getting, and if we are making payments after 60 days or 90 days, again our PAT margin will come down, and again this thing. So only we have opted for this design. When I could take 40 crores of debt for 116 crores of top line in 2023, we have changed this entire scenario, and now we have brought down the credit level, and we are doing this. And if whatever you have now given us, let us take this point. We'll also sit with our finance team. We will calculate something is doable in this format. We will definitely work on that also.
Yes, sir. I'm just trying to say that if you get an extra credit period from the creditor, to that extent, short-term borrowing stress will be reduced. So it's just about rebalancing the business a little bit, even if that means, some percentage points of margin here and there, because eventually you are keeping your trade payables happy, the creditors happy, flat, right? I mean, broadly, and you're continuing to grow with the trade receivables, you're funding the entire working capital from your debt borrowing. And therefore, at every point in time, you will be, subject to external capital availability, your growth. And most of that will come from debt, sir.
I understood, sir. I understood your point is taken. Definitely, I'll have a discussion on this, and we will try to implement it.
This will go a long way towards improvising the financials of the company. This structural change will take some time maybe, but it will go a long way towards the sustainability of the business model, sir.
Understood, sir. Point taken.
Yeah. Thank you so much, sir. That was the only observation I wanted to answer.
Thank you.
Thank you. Next question is from the line of Dipankar S., an individual investor. Please go ahead.
Yes. Good afternoon.
Sorry, your audio is not clear. Please use your handset mode.
Most questions of mine have been answered. So one question is, how do you see this receivables going ahead? What would be the trajectory? Would it be stabilizing or coming
Your
down?
voice is not clear, sir. Can you just please make it clear, please?
Dipankar, please use your handset mode. Your audio is not clear.
Can you hear it now?
Are you on
Is
your
it
handset
better?
mode?
Yeah,
No,
I'm on my
use the
handset.
handset, please. No.
Is it better? Hello?
Yeah.
Yeah. So I was just wondering about the receivable trajectory going forward.
Yes, sir. Please go ahead, sir.
So I was just asking about the receivable trajectory going forward. How do we see FY27 receivables lining up?
Priyanka, can you just speak?
Sir, he's asking
Yeah.
for how are we looking our this trade receivables since it is so high. So how is it that we are going to in forward, like how we are going to take care of this receivable?
Answer or I'll answer.
No, sir, I just want to say that receivable is high because of this election. We were a little high on the trade receivable. And again, as sir has mentioned, we did receive around 45 CR already out of that. So in next financial year, I don't think receivable will be this much high because we always get, since it's all state and central government, we get it on time only. But sir, that 120 days cycle will always be there, since this is what the trend of industry trend is. That we cannot push or go beyond than that, sir. But of course, this receivable won't be this much of high, sir. That is for sure.
Can you give me a split between
Dipankar, I request you to join
state
back the
government
queue.
receivables and NHA receivables?
Dipankar, I request you to join back the queue, please. Thank you. Next question is from the line of Rajender Passi from NP Analyst. Please go ahead.
Yeah. So my question is also on the similar lines which the earlier investor was asking.
Rajender, there's some disturbance on your line. Can you use your handset mode, please?
Am I audible?
Yes, please go ahead.
Yeah. So what I was saying, my question is also on the similar lines which the earlier investor was asking. So regarding on the receivable side, so what is the general, segment or your sector trend, like as a percentage of revenue, where should we look at from the receivable side? So if let's say if we are doing 1,000 crore revenue, what should be our ideal receivable numbers in that case, so that we can get an idea on where our peers are and where we are?
So it is not about the top line of the company. See, normally what happens is we do much of billing in the Q4. You are aware of that.
Yes.
Q4 billing will be high, and this will be very much below 90 days to 120 days. So we are trying to bill it maximum, so that there will be much support from the departmental people also to kind of cover the financial expenses. So that is what happens in these EPC contracts. So most of our billings happen in majority of the billing happens in Q4. That is where we get this problem, and we are trying to mitigate this. But at the same time, I cannot reduce my quantum of billing in Q4, because Q4 is a good season to work. Actually, there will not be much of rain. There will not be much of other hindrances. So that is the reason when we can execute the works on full strength. And when you are asking about the percentage of revenue which can be taken into,
Sir, I think his question.
Wait, I'm telling. Consideration for the data days, data, how high data or whatever it is. For a company performing 1,000 crores, we can take at least 200 to 250 crores. That can be 250 crores at least to be in this unbilled revenue, or data trade receivables. Something like
Thank
that.
you.
For a 1,000 crores company, it can be 250 crores.
Okay, so we are looking at
Rajender, I request you to join back the queue, please. Thank you. Next question is from the line of Jayesh, an individual investor. Please go ahead. Jayesh?
Hi, sir. Hope you are doing
please
well.
go ahead.
You're able to hear me, right?
Yes,
Yeah,
please
yeah.
go ahead.
Yeah.
So, sir, I have been following the company since, uh, launch of IPO. Okay. Every time, everything goes happy. Just this time, what I can see in the results is that the other expenses there, which is huge. It almost has got doubled, if I'm not wrong. Other direct expenses. So can you please put a light on that, like exactly what is other direct expenses, why it has huge spike into it?
So it is the
Yeah, go on.
subcontract expense.
Which
Hello?
one is it? No, the other direct expenses he's asking about.
So it is the subcontract expense, sir, that is asking about actually.
Yeah,
So that has not gone. Sir, that has not gone way high. It was around 127 crores last year, and this year it is around 155 crores. There is not much. It is grown intact with the top line growth only.
yeah.
Thank you. Jayesh, I request you to join back the queue, please. Thank you.
Madam, do we have many people on the queue?
Yes, sir. We still have few in the queue.
Okay. If not, we could allow them to go for their second question or third question also. That's my request. If there is not much of questions, we can ask them to go with the second, third question instead of breaking them. Okay.
Okay. All right, sir. The next
Thank
question is from the line of Hiren Modi from Balkrishna Family Office. Please go ahead. Hiren Modi, please go ahead with your question.
Am I audible, ma'am?
Yes, please go ahead.
Yeah. So as we have guided for 700 crores and we are having a 500 crores of order book on hand, I was just reading towards this bitumen prices, the way it has been escalated and the way it is nearly doubled. And one of the quality is VG40 that is being used in roads and everywhere. And now, as the way the crude has been getting imported from much of the part from Russia, and that crude doesn't give that VG, it gives just VG10 and 30. That is what I was reading about. So my concern about the company is that the West Asia crude is important for our bitumen, the quality of bitumen that we require, and the way the prices are escalating. And I don't foresee that the West Asia conflict getting resolved anytime soon, maybe next maybe 3 months or what, I don't know. So how are we going to mitigate this problem? The 500 crore that we are having, how much is getting affected by this bitumen price in this? That is a part A, sir. And the part 2 is how we are going to mitigate this, that the orders that we are going to get, new orders that we are going to tender into, at what price, how it will be, sir, please.
So luckily, out of the 500 crores, we have around 300 to 350 crores of concrete involved in this. Not much of bitumen involved. Bitumen is way lesser than 10 to 20, maybe around 20% of our entire works on hand. So that will save us big in this year. And also what you are talking about is correct. And see this, there are some problem in the extraction of this crude, and the demand is on the rise. The demand for the crude is always on the rise. But when I am speaking with this Indian Oil Corporation officials, they have made alternate plans and they are getting some products, and now they have come up with some other options also. So they have some products which are getting it from other places, and they are extracting it in their other refineries. So which is matching the requirement, and that is also workable. Now, being the condition in this is VG40 is a problematic thing. What the NHA and other state officials are now on the talks to get it done with VG30 itself. VG30 and VG40 are not much of difference. So they are planning to have the conditions not restricted to VG40, and where they may implement VG30, and they may revise the estimate based on that. So this is also on talks. Positively VG30, if implemented, VG30 will not be a problem at all. So we are getting Russian crude easily that.
Okay. And so whatever the new tenders will be there right now, as I was just looking towards the pink papers, it is showing that every contractor is increasing its cost by maybe 1.5 times. So it will be easy for us to get those tenders, and how it will be, sir? Just for our target of 700 crores. That is my basic intention behind this.
So getting an order book is not a tough game at all. We can get, say, if I'm reducing my margins and if I'm bidding at a lower cost, I'll be able to get how many numbers can I get. But we are very much sticking on to that profit percentage what we want, and we are bidding at that levels. And there are people who are bidding right away who can do, I don't know what they do to maintain that cost or profit margin. And there are people who are showing 2 to 3% of PAT in this industry. So they are not bothered about anything. They just want to show, they are just showing 2 to 3%. I don't know what profit they are getting, and are they just showing 2 to 3% and getting 10% or not. But there are people who are bidding at very lower cost. But I don't go for that. So what we have decided is, instead of bidding for 10 tenders and getting 2 tenders, we have decided to go bid for 100 tenders, so that the probability will be much on the higher side. So we have recruited a special team in the last 2 months, so that they keep on working in all the tenders which are positive for us, which will be good enough for us to execute. So once this tender, the things which are workable, we bid across all the tenders, so that we'll be in a higher probability of getting the works. So there will not be any problem in getting the work orders at also.
Okay. And sir, any plans to get ourselves diversified a little bit, maybe in sewage, or as you were talking about solar also? Means the way the geopolitics is turning post-Trump era, the things how everywhere it is unstable, and it is setting a new norm where you cannot be clear about how the commodities and every price will be. So are we trying to safeguard somewhere in our margins, in our business, where things won't affect much? So any plans or something to add certain area apart from road?
Yeah, we are planning to. We have already done some buildings also. So we are trying to get into this water board and other sewage treatment plant, as you mentioned. We have done one small project in that. So we are also looking to enter into these things, but not at the aggressive phase. We are trying to reach one by one, so that how it works, so we will plan to withhold in that those things. And solar is turning to be positive. This year we will do good in solar also.
Okay. Because every challenge is grows us. If you are a student, as Narayanti says, that it grows us, it teaches us something. So maybe something we are getting to learn from this particular crisis, and where we can safeguard our company and we can grow hand in hand, sir. That is what.
Yes. That I understand, sir. There is always good to have a plan B.
Yes. So thank you for answering my questions. Again, best of luck for the future.
Thank you, sir. Thank you.
Thank you, sir. The next question is from the line of Jayesh, an individual investor. Please go ahead.
Hello. Yeah. So last time I was asking a question, but it was I was removed from the queue. So sir, I was asking that other direct expense is almost 50% increase. Like there is a sharp increase in other direct expense. So I am not sure like if you are looking at that exact point.
So I increased 50% from where, sir?
Okay, so if you will see last H1, okay, so it was 885 crore, okay, and this quarter I can see it is 154 crore. So it is almost close to, 40-45% hike.
Sir, our direct expenses includes mainly the subcontract expense, sir. Since in the first half of the financials, our billing was actually maximum in the second half, sir. So accordingly, in that ratio, the subcontract expense also increased. Since the billing in the second half was higher than the first, that is the reason you can see that change actually. And also in the month of September, I remember some subcontract invoices were yet to come, sir. So we received it, I think, in the month of October, November. So that was also one of the reasons why this is showing a little higher.
Okay. So if you see this, this H2, we have received 19% operating profit margin, but it was 21% last year. I'm talking year on year, okay? So
Okay.
Would you be able to come back to that 20% plus mark?
So definitely, sir, we are right now 19.32% actually. And I also said that why our EBITDA was lower. So we'll definitely try, sir, if everything, if prices and all is good. Like a geopolitical reason, our bitumen prices went up and high. But I'm sure, sir, this time it will be 20 and above only, sir.
Okay. Yeah, I think that's it from my side. Just one last suggestion. I already have heard lots of, conversation on cash flow. So I would request you to please take a look at it.
Sure.
It will be
We'll
really
do that.
helpful for us.
Yeah, sure, sir. Thanks for your suggestion. Will do.
Thanks.
Thank you, sir. The next question is from the line of Rajendra Pasi from NP Analyst. Please go ahead.
Sure. Am I audible?
Yes, sir.
Yes, sir.
Yeah, sir. So from the last question from where our discussion was interrupted. So my question was, as a percentage of total revenue, where do we see our trade receivables and trade payables at in the future? So let's say if we are doing 1,000 crore revenue at a consolidated level, so at what percentage should ideally we see our trade receivables as well as trade payables?
At the top line of 1,000 crores, I just wanted to take the trade payables higher as per people suggest. I just wanted to take that higher and lower the trade receivables. And I'll be happy if this trade receivables are maintained well below 15% of our top line, maybe around 150 crores or 200 crores if top line is at 1,000 crore.
So at a macro level, we should look at least 15% on the trade receivable side and maybe around 10 to 12% on the trade payable side, something like that. So that should be okay. What we are looking for.
Yeah.
Okay, sir. Yeah, that was the last question. All the best, sir.
Also, sure. Thank you very much.
Thank you, sir. The next question is from the line of Dipankar, an individual investor. Please go ahead.
Yeah. So on that 78 crore unbilled, how much have you been able to certify? That is the first question.
I don't understand, sir. Out of that?
On the 78 crore unbilled revenue, how much have you been able to get it certified till now? Has the entire been certified by the government?
I don't remember the exact value. It was around 20 to 30 crores only we got it certified.
Okay. And second
This
question.
this month then we'll be able to get it certified further. So it happens like that. This month then we'll be getting certified something, and the next month the always will be done.
Second question is on the receivable side again. Out of 140 CR receivables, what is the share of NHAI and what is the share of TN government and other private entities?
Can you share that, whatever it is? You have it in mind?
Are you asking the ratio of state government and central government, sir?
Yeah.
Yeah.
On the receivables. Yeah.
Okay, sir, exact percentage I don't remember, but we usually maintain 60-40, sir. Like 60% NHA, 40% state government, like that. But if you want the exact figure, I'll just check for financial year 26 and I'll mail you, sir.
Okay, one more broader question. Since the election is done, are we going to see any more impact coming along, or have we absorbed all the impact and now things are smooth from the election point of view?
No, the country is back to normal, state is back to normal after the elections. So I don't think there will be any impact after this. We are hopeful about this government also. This government, whatever they are addressing the public as well as business people as of now, they are positive about zero corruption and all these things, which we look very much positive. So I think this is it's a brighter environment to work in Tamil Nadu as of now. So it's good to go always now in Tamil Nadu.
Okay. One more question regarding on the last call we discussed that in solar we'd be expanding, we'd be having somewhere around 50 CR, 200 CR revenue. So I could see only 20 CR. How is the solar business panning out, and what's our outlook for that for this financial year?
The solar, we are doing something in this financial year. It's cooking up, and we'll be able to touch something, and we'll be able to deliver something big in this year. So we have gotten first order, and we'll be definitely executing that. And apart from that, we are on the run. You see, these approvals, all these will be in place now after the new government has been formed. So we don't see any back foot in that. So we'll be having some good numbers with us also.
One last question. We also thought of expanding beyond Tamil Nadu. Where are we on that? How would we see the revenue mix from Tamil Nadu and apart from Tamil Nadu in this financial year?
Yeah, we started bidding outside Tamil Nadu also, but we have not yet done anything positive on this. We are not winning any tenders. So we'll keep on bidding, and hopefully this year we will start to expand our network outside Tamil Nadu also.
That's it from my side, and thank you so much for taking so much time and answering everyone's questions. It was a really pleasure talking to you. All the best for the future.
Thank you, sir. Thank you very much. Thanks for attending the call.
Thank you. Next question is from the line of Nilay, an individual investor. Please go ahead.
Yeah, can you hear me?
It is not clear.
Yeah, now is it clear?
Please use your handset mode.
Yeah, ma'am, is this better now?
Yes, very clear. Please go ahead.
Yeah, I just want to say, I want to congratulate on the great set of numbers. I'm very happy to be an investor in a company with such a committed promoter group. For a company growing at this pace, even negative OCF or operating cash flow at times is understandable if the capital is being deployed efficiently for growth. Also, I've rarely seen con calls extending from 1 hour to almost 2 hours and still continuing with the same energy and transparency. Hats off to the commitment. This is all I wanted to say.
Thank you, sir. Thank you very much for your words.
Yeah, and I also support Ms. Priyanka.
Thank you, sir. Thank you so much.
Thank you. Next question is from the line of Jayesh, an individual investor. Please go ahead.
So, sir, just one question I wanted to ask. Do you have any defaulters in the trade receivables? Like, for example, if there is 100 crores, just an example I'm taking, is there any long-term receivable that is pending from client end or anyone else?
No, sir. We are all government dependent. It is not at all possible in this. It is all certified things and all. We don't have anything in that stage.
Okay. And any private players you have?
No, we don't have any such things.
Okay, that's it from my side. Just one thing, sir. What I would suggest is when share price falls, right, investors are completely blank at that time. So at that time, everyone is selling. So just one thing, if promoters can come up and highlight that something positive or anything positive for the investors, that would be really helpful. Just for example, last year for Q1, you had shared one tweet or some document to NSE saying that some highlights of the Q1 results. So at least you can provide that just for the sake of investors. That just really helps.
Sir, actually, when we declare a result for September and March, we don't do that. But other than that, in every quarter, we made it a point to give some sort of highlight. So this quarter also, you'll find in Q1 also we'll highlight that, sir.
Yeah, that's what I was looking for.
Yeah, okay, sir. Thank you, sir.
Thank you, sir. Thanks for your advice. Thanks.
Yeah. Thank you very much, sir. Yeah.
Thank you. Next question is from the line of Rajendra Passi from NP Analyst. Please go ahead.
Sir, I wanted clarity on one, I would say, misconception, or I'm not sure like what that is, that there has been certain rumors around the link up of a certain political party in Tamil Nadu and our company. So if you can provide some, throw some light on that part, like what are the truths, and if you want to basically share anything on that part. I'm sure you may have also seen those kind of rumors on the social media handles.
Sir, I don't have any link with any political parties except for 2 days. One day I'll vote for the state election, one day for the central election. Apart from that, I don't have any link with anyone. Apart from that, any other thing. See, there is a rumor going on because my brother-in-law is a leading actor in Tamil industry. So being our new CM Vijay is an actor, it is a rumor going on that I am very much closely acquainted with the CM and all, but that is not the fact. My brother-in-law is closely acquainted and not me. So it's a rumor only. As you highlighted, I am answering this. I have not mentioned about my brother-in-law is a leading actor in Tamil Nadu. I have not mentioned it anywhere till this time. So this has to be highlighted as you have asked me. I am just telling you that.
Yeah, sir. That is why, there have been a lot of rumors, like the business is going to go downhill as the, government has changed and things like that. So I wanted, so that you can at least put an end to these rumors in this official convo. So that is why I wanted to ask it.
Okay. Thank you. Thanks for that.
Yeah. Thank you, sir. Thank you.
Thank you. Next question is from the line of Ajinkya Pawar, an individual investor. Please go ahead.
Hi, sir. Good afternoon.
Good afternoon, sir.
I hope you remember.
A long call indeed.
Yes, sir. It's been 2 hours. It's been 2 years.
It's always there. If you perform well, you will just get a congratulations, 1 minute word, and it will be wide. If you don't perform well, only your parents will keep on questioning you.
Yes, sir. First of all, sir, congratulations and thank you so much. Because I know when you are running business, there will be a lot of problems. And from this conversation, I get it that when investor was, sticking to the one question that when we are growing, we need capital. So for capital, we need to raise the money. And when investor just having one question, if the stock price didn't go up, then how are we going to fund it? And that is a, genuine question, sir. But I know you are running this business from long time, and I know you are going to address all the problems. And just because of you, sir, I didn't sell a stock. When it was 80, I entered. When it went to 250, I didn't sell. Again back to 80s level. And I don't worry, sir, because as I said, I am a long-term investor. And I know, sir, not 1 year, 2 years, 3 years. Down the time, 5 years, whatever we are targeting, let's say for 2,000 or 2,500 crores of target, we are going to achieve it, sir. And all the best. I just wanted to say all the best. And the last investor had one good solution. Whenever there is a fluctuation in the market, the stock goes down, there is, for investor, we need some kind of support. So I used to mail Ms. Priyanka, CS, but last 2 months I am not receiving any kind of mail. And I want to just tell you one thing, I am a YouTuber, and in my community, there are at least 150 to 160 members which have invested in AVP. So, last 1 year, 1.5 year, the stock price is going down. So we need some kind of motivation. These are the investor presentations where we get motivated. So I just have a, one request from Ms. Priyanka that whenever we don't mail every day, we just mail, when there is a fluctuation or say 2 months or 3 months, because we don't publish quarterly results. So I just have a request and just we ask for small things. Are we going to planning for any investor meet, or is there any update on business? So just wanted a small request that she should reply, or there should be some kind of mechanism. We should get some kind of feedback what's going inside the business, so we get motivated. That's a small request from me, sir.
Sir,
Definitely,
thank God
sir.
you are. No, sir, 1 minute. Thank you, sir. You are here online. Actually, I have been receiving your mail, but I am also replying to the mail, but the mail is bouncing back, and MD sir is also marked CC in the mail. Since I did not have your contact number, sir, I'm not able to contact you. I just request you next time, please, can you also mention your contact number, because every time I try replying to your mail, it just got bounced back. MD sir is also marked in all the mails, sir. We did not have any alternative number to get in touch with you, sir.
Okay. Fine. No problem. Sir, all the best, sir. All the best. I know you are going to.
Thank you, sir. Thank you very much, sir. Thank you very much.
Okay, fine.
Thank you. As there are no further questions, I now hand the conference over to management for closing comments. Over to you.
Thank you, madam. It's always nice to hear from the investors. All the inputs taken, all the feedbacks taken. We will work on for the investor relations as well. We will mitigate all the problems, whatever they have given, where they have suggested us, and we accept the wishes from all the good-hearted investors. And thanks to all of you. We'll keep meeting you again and again with many good news to come, with good news to follow. Thanks again. Thanks a lot for the con call. Thanks for the hosting this. Thank you, madam.
Thank you. On behalf of Atlas Capital, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.